So 11:15 on this Friday, and there's a few things I want to talk about, and we're gonna give you a small gap lesson. Market is gapping down this morning, gapping to 207. We looked at this area as support. We drew the line here, and then we drew the line here at 2066 and 207. So we know this market going sideways for a bit, and when the market does that, it's very simple when you trade gaps. I'm looking for something weaker or something stronger. Not looking for to find anything that doing the same thing or following the market or depends on the market. And the problem this morning was the very poor gap down list. Here's the SCMG gap down, going cuckoo here this morning, moving higher. The Apple was just the same as the market and it opened here at support, so I couldn't touch that. MDVN, look at this guy trading from 58.6 to 59 and then 59. It's crazy. Not touching the rare. Did the job. The rare was okay. No setup there, and MTCO on the cuckoo side as well. Gapped up here, gapped down just a tiny bit, went lower. There's nothing on the gap downs. I was focusing on the gap ups, and the lesson I want to give you, or my 2 cents, is the difference between the APC gap, and then we're going to talk about the play that we took, APC gap and ALB. And the ALB is coming already from a massive run up. This is stronger than the market, rallying with almost no pullbacks. Look at this. It's a power trend, what they call. Here's a rally. Here's a little pullback. Here's a rally. Here is a pullback. And now there's a beginning of a rally. And today we're gapping up to new highs, to no man's land. There's, I mean, this can go to the moon. So, but the thing is, this is already in an uptrend, and it's already coming from a 2 or 3 days up move, and I want to see a pullback. I'm not buying those after when they come from a green or a green day, or especially if it's 2 days. So what I was looking at, or before we're going to talk about that, let's compare it to the APC. Here's the APC gap. Now the APC is also uptrending. Notice that in the last few days this is going sideways, and today it's gapping over the last week of trading, the last 5 days of trading. Two more things you have to look at is the 200 MA and the 20 MA. It's the first time, not the first time, but it's really above the 200. If you look at this week, yeah, it was most of the time above it, but today it's really taking the distance from it. So APC I liked higher. It did not give me that setup I'm looking for. I was looking for a 5-minute setup, a 5-minute buying opportunity. As I mentioned earlier, I was looking for something like this. I wanted to see a pullback to this area, which is the 20 MA also, and then catch it down here with the stop, possibly low of the day or this pivot, wherever it stopped. And this is higher, and it's still valid and looking higher. What's the trend now? The trend is an uptrend on the 5. Really, really beautiful. And if I had this, believe me, I would be still in this. And I'm going to talk about the trade that we took. And I like the APC. It just did not give me the setup. It gave you here a breakout pattern, which I don't take. You see it up here, 54.90 or 55, above 55. I'm not a breakout or breakdown player. This is not an entry for me. Entry in this case only on pullbacks, which I never got. I did get my entry, or our entry, on the ALB. Here is that ALB. That's what we call a G4. We get a range in the morning, and then we get 1, 2, 3, and the entry was above this guy here, 83.28. That's what I posted on the board. What's the problem with this? It's a bigger of a stop. So the technical stop, without cheating it, would be 82.85 according to our manual. So you're looking at almost 50 cents of a stop. You can cheat the stop and put it just under the whole number. You can cheat the stop and put it under this entry candle. There's many stuff that you can use. I like to use low of the day because I feel much better there when it's pulling back. I know, oh, this is pulling back, but it's not likely for it to come back all the way. Well, today it did. So We take it here at 83.28, and I said there is a little of a problem with the risk reward. I guess I just wanted to take a trade and didn't want to miss the trade like I did yesterday. So target was 84, or target was for me 83.90. Okay, so 83.90, that's not quite the 2 hours that we're looking for. It's 1.5 hour. Okay, so that was the problem with the trade. I knew it before I took it. Okay, I knew it. So we took some out here, and if you were greedy, yeah, I was greedy and I didn't enjoy the 95 that it printed, or 90s, I took 85, which was okay. And then let's talk about the next up. Then I said, wait for some red. We're gonna get some red. I pulled back. It needs to come here, and it did come in one candle. You get this drop to 83.30 and then right back up. So when I look at that, it's not the pivot that we teach, but it's still an area that you know that is full of buyers. All these candles, who's in control? The buyers, right? You have this bottom intel. So when I get this, I'm thinking, if we go back below this tail, I'm not interested in this anymore. Okay, it needed to stay in this area, and I didn't put it just under 38. I gave it more room to 25. There's nothing, and this is the key area, the key thing is nothing to do with the fact that we entered in the same area. There's nothing to do with that. It's not a break-even stop, you have to understand. It's a technical stop. And I put my stop at 24, and it held there for a few minutes. That was it proven to be a good area to put the stop in, and it held by the penny for a few minutes, and then finally gave up, and I was out. So it's not a big trade. It's a winner between half an hour to an hour. Depends how did you manage it. Depends how lucky you were with the exits and how much slippage you got on the way out. There was a point. It was 10 cents spread. But the lesson here is the better gap, which I really wanted, is doing the work. The one that I like just a little less and ranked it lower as a gap. It did the job, but it's not as good. Yeah, it's proven until now. ALB is making a new low, and that was great exit. Yes, Roy. And the APC, on the other hand, while the market is having some hard time down at the lows, this is tough, and this is really strong. So I would love, and I promised you, you will be in one of those with me very, very soon. I mean, earnings season is coming, but we don't have to wait for that. They're here every day. If you know how to manage them right, you can benefit from them. The problem is most traders and novice traders, they take some profits here and some profits there, and that's it. My job is done for the day. Just to realize at the end of the day, this was a much bigger trade that went without them. So you know that's not the case with me. If I have something, if it's a winner, I'll stay in it as much as I need, as much as I can. As I'll give it as much room as it needs. And in this case, the APC, if we add it somewhere here, this would be the new stop, and this would be the new stop. And I would probably wouldn't move it to 50. I would leave it at 54.40 and just let it go, let it trade. I know that it's easy to say because I don't have it, and you can pretty much say anything you want about it, but you guys know me. I've been here for so many years in this room, and you know how I manage them. So ALB, not a big trade, but we'll take it. And that's a Friday. It's a big gap up list. Any questions, guys? Hope you learned something new. Again, the key lesson, or the lesson I said I'm going to talk about, is small gap lesson. So see where price is coming from. Look at this coming from 2 green days. Look at the bigger picture. This is already going higher. If you bought it somewhere at 65, at 75, if you bought it at 80, you want to take some profits this morning. That's what you see. And APC is coming from a sideways action, and people are actually, you have new fresh buyers up here after it's going sideways, and that's the big difference. So that's the lesson of the day, of the week. And if you have any questions, I would love to hear you.